Dan's a fantastic man. He really is.
Ladies and gentlemen, please welcome.
And what's going on, everybody? This is Dan French. This is the French Workbench Podcast on a Tuesday. And we have a lot of good information, as always. And we have a great guest on today. He's a market analysis. I'm going to talk with him a little bit about what's happening here in the market. And also really just the markets in general, not just here in Las Vegas, just across the board. Also in studio, I have a couple of familiar people here that we continue to bring on because they're great at what they do. All right. So let's get right into it. Let's talk. Rich Salas is back. Rich, what's up, buddy? How are you?
Hey, Dan, I'm doing all right. How are you doing?
Good, man. Good. So what's going on with you, buddy?
Well, I was kind of complaining a little bit earlier to everyone in the studio, but I'm going to turn around and say I'm actually glad that I made it here today. I had a rough week. I had an escrow from hell, but it closed. So that's always a good thing.
Yeah, man.
And
so you've been in the trenches, huh? So
yeah.
it's starting to slow down, right? A little bit in the industry.
It is.
Yeah.
And, I do a couple other things, but yeah, I haven't had a sale close in a while, so it's good to have this one closed. But it does, it's that time of the year.
Yeah.
Things are starting to slow down. It's not the hot months.
Definitely.
Normal.
We also have Esmeralda Lucia. Esmeralda, what's going on, girl? How are you?
I'm doing good. How's everybody? Glad to be here.
Good. I appreciate you coming on. So what's going on with you? Anything new?
I would say, hey, I'm just remodeling some things in my house, and things are actually arriving really fast. They went from 4 weeks to 4 days. So,
Ooh, what are you doing?
I was just replacing like the flooring, but
Yeah.
it was like a moment where everything you asked or everything was a delay. Oh,
Right.
We can't get nothing. There's no inventory. It's about a month away, 2 months.
Right.
Now it went from 4 weeks to 4 days. I was like, wait, what happened?
Yeah.
So I think things are moving.
Yeah, so let's talk a little bit about what we're going to have our discussions on today and some of the topics. So let's get right into it. First off, I want to talk about what's happening around the world as far as inflation, and I want to talk a lot about what's happening with infrastructure, the infrastructure bill. Want to talk a lot about what's going on with the amount of what GDP is doing. Also, too, what rates are going to do, mortgage rates. So this is a lot. This is going to encompass a lot of information. So we have a market analysis that I want to talk with him on. He's very knowledgeable, and he's been doing this for quite a long time. And so I just want to go ahead and bring him on here. Patrick, are you there?
Hey, Dan, how you doing? Thanks for having me on. It's my pleasure.
Yeah, man. Thanks for coming on. So let's talk a little bit. We got Patrick Hennessy. He's on. He's a market analysis. And he's somebody that will talk to us a little bit. So, Patrick, you've been a market analysis for quite a long time. Is that right?
Yes, I have been. My former life, I was a trader down on Wall Street in Lower Manhattan, New York City.
Yeah.
So I've been around the market for a while.
Yeah, so let's talk a little bit, man. So you do a lot of research and you kind of watch the data. And a lot of data that you provide is to loan officers. It's to just many different facets of people. And let's talk a little bit about what you're looking at with the infrastructure bill. Now, a lot of people want to know what's going on. So we'll talk about the infrastructure bill. I want to talk about inflation first. And let's talk about how that's affecting us. So when you look at inflation, where are these numbers at right now? Because everybody's worried that inflation is just going rampant and it's not going to come down anytime soon. Are you worried about this?
Well, right now, we've had the recent CPI year-over-year number was 5.4%. That's the highest it's been in quite some time. But what we look at and what the Fed looks at is the Fed's favorite inflation gauge, which is the core PCE. That's the core personal consumption expenditure. It's their favorite inflation gauge. And that's at 3.6 annually right now. And it's been 3.6 annually for the last 3 months.
So what is it? What is it normally, Patrick? Like where does that number? Everybody always says it's 2% inflation. Is that normal or is it?
Well, pre-pandemic, pre-shutdown, we were below 2%.
Right.
Now the target range for the Fed is 2%. They always wanted it to be around 2%, and it was well below that for about 10 years. It was when inflation ran low.
Yeah.
But now we're seeing the opposite.
So you look at the inflation numbers and you're seeing that, we're almost double what the normal inflation is. And I think a lot of people are worried about, well, is it going to come down? What is the Fed going to do with the inflation problems, and how do they counter that? And we know that there's a shortage, right, of inventory and goods and services. People are not getting things like they used to. So you're seeing higher costs for these goods and services that people typically would pay for, let's say pre-COVID. So let's first talk about what's happening with that situation. Is that recovering as far as, we talked about boats out, on the offshores of Los Angeles, right, in California. They're docked there. So there's a lot of issues with getting inventory and goods and services that people typically have. It's raising the costs of these items for people to purchase. Is that getting any better?
Well, I mean, right now we're at the peak, or we're coming towards the peak. What happened was, the year that everything was shut down.
Yeah.
What happened? There wasn't much production being done.
Okay.
So a lot of the companies weren't producing the goods that they produce normally. And then once the spigot got turned on and the country reopened, economics 101, supply demand. There was a ton of demand and the supply was low, and plus the supply chains were having a problem because people weren't working. We don't have enough truckers.
Right.
And we don't have enough people to unload all the goods that are coming into the port.
Right.
Patrick,
So
can I ask you?
We're just seeing higher prices.
Go ahead. Rich
Yeah,
Solis is going to ask you a question here, Patrick.
I just want to, so you're talking about the PCE? Did you call that the personal consumption?
That's the personal consumption expenditure. It's basically a gauge which measures, goods and services that consumers may be purchasing or using.
So, like, what does
it excludes food and energy.
Okay. All right, that's how I was trying to.
Excludes food and energy. So
to not just be all the inflation that
so
they measure.
Why are more people not worried about this inflation report, Patrick? I mean, because I see it every day. I go down to the store, I get meat, I get anything, and you can just see the prices of these items are going up very rapidly. Now, I think there's high concern about inflation's just too far gone. A lot of people talk about raising interest rates. Fed funds rate is still at 0. And what is the tactics they would use? Because, look, I don't know if you agree with this, but is this somewhat of an artificial situation where the Fed is controlling both sides of it, really? And they can turn it on like a water faucet and turn it off at any moment.
Yeah, well, I mean, what they're going to start to do, the first thing they'll do to combat inflation a bit will be to taper their current asset purchase program. Now, they're purchasing about $120 billion in treasuries and mortgage bonds each month. So as they purchase less, there'll be some liquidity that may come out of the market, but not a whole lot.
Right.
So that's what's been driving stocks right now is liquidity.
Okay.
And with so much liquidity in the market, where's that money going? It's going into the equity market. Right.
So you think that the inflation problem that we're seeing, because we talk a lot about it. I have other podcasts that I do. I talk a lot about, we're starting to see that people always think that hyperinflation is going to be something that even may be considered. So you don't feel that this is a threat to us as far as losing our dollar purchasing power with this inflation situation? You think it's going to come back down at some point, correct, or no?
Yeah, I mean, we here at the Mortgage Market Guide, we feel that, it has been leveling off, that core PCE.
Right.
You have to watch very closely. And as, I know the holidays are coming, so of course there's going to be a heavy demand for all goods and services. But maybe once we get past the holidays, the supply chains will ease a bit, and maybe prices will start moving a bit lower. But like I said, we'll have to watch how we play out here in the next 3 to 4 months, including in the beginning of 2022.
Well, let me ask you kind of your take on something, because I know that that target rate, that 2% for inflation, that's kind of, I think, that was kind of always, that we never really considered a situation like we're in right now. And so I definitely think what you're saying about they've pumped all kinds of money into the stock market with buying these bonds, the Fed's program. And I know that that's helped keep kind of like the upper echelon of society propped up, so they haven't really had to feel much of the pain. But as far as like what we're going through right now, I mean, it does appear that what we're facing is, a worldwide supply chain breakdown. And so if we can't fix that, that's got to be more of the culprit than even the Treasury program. That seems to be the real issue.
I mean, the supply chain issue right now is one of the biggest issues plaguing, global economy.
Yeah.
Yeah.
So, I mean, that would be the biggest thing to fix, I guess.
I have a question, Patrick. Sorry to interrupt. Yeah. So from what I hear from some just different people, and I've heard it within the last week, that for the holidays that there's going to be a shortage within food and also like any like Christmas stuff. And that if you were looking to participate in that particular holiday, then you need to be making the arrangements now. Is that something that you foresee when it comes to like food and supplies and gifts and so on and so forth?
I mean, right now where I am on the East Coast in New Jersey, I'm not seeing any of that right now as far as like the food stores. But as far as the other stores in the areas, yes, we are seeing shelves that are becoming increasingly low, for stock. And that could be a problem going forward, because right now it's only November 9th. And, the heart of the shopping season is going to be starting in the next few weeks. So, yes, that could be a problem, without a doubt.
I mean, I've been hearing them say that for months now on the news and things about you better get your orders in now if you don't want them sitting out outside the LA harbor in January.
So you look at the inflation part, you think that it's going to correct itself starting of, let's say, the 2022, because a lot of people we did a lot of research, right? And there's a lot of data, especially starting in 2021, that showed that the market was going to, at some point, maybe third quarter, fourth quarter, you're going to start to see things start to get better, right? People getting back to work. You see that maybe these problems that we had with getting, the goods and services and the truckers issue with the employment delivering these items, that it would be better. Are we any better than we were when we first started at the beginning of the 2021? Or is it relatively the same?
Well, in the beginning of this year, that's when we started to see, the issues start popping up because demand started moving higher.
Right.
And as the months went on, the producers and retailers try to keep the prices, low and not, pass those higher prices on to their consumers. But eventually they had to. Yeah. So right now, right now, if you're going into stores, I was over in, a colleague was over in a big, huge mall by us, and it was packed over the weekend. But you're not seeing many sales.
Really? That's unique. You're not seeing
many sales over here.
Yeah. So let's talk about the housing situation. Let's talk about the homes, right? So this is what I want to talk about with people out there in Las Vegas. So everybody always thinks, well, there's going to be a crash, and at some point you're going to start to see some data that's going to show a crash, or we're going to see a big recession. Now here, we've just recently seen that there's over 200 properties that have price reduction. I went and seen a home that was priced out at $750. They just reduced it by $60,000. And the mindset is just
to jump in there.
Yeah.
I think that's a good thing, because these prices were, let's face it, they were really frothy.
Yeah.
Yeah.
Yeah. And it's like this. You look at the housing market, and there's still strength. Now, you go back and you look at when the market started, where we had the recession, right? Where we had the housing market crash. And I would say from 2008 to 2018, it was relatively a slow economy recovery, right? Because economically, it just really seemed like it eked its way. The housing market, it was slowly going up. But you look at 2018 and you go to the end of 2019, we know what happened last year. it just felt like the housing market just went on fire, right? It just completely went from 0 to 100. And you're looking at where we're at today, and people feel like, okay, this went too quick, too fast. How could this sustain itself? Yet the demand is still there. You got demographics, go ahead.
Yeah. I mean, well, let's go from the beginning. Home prices, skyrocketed because of that supply chain issue. Look at lumber. Lumber went from $320 back in March of 2020. It topped out at $1,700 in May. I mean, right now, yes, it has come back. It's about $600 now. But still, from $300 even to $600, that's a double.
Right.
So a lot of what happened with the housing, a lot of course, the supply chains to do all, get all the parts for housing and labor.
Right.
Was scarce. So that's why you saw prices, skyrocket since last year this time. Because last year this time, there was no activity really.
Right.
So you go from no activity to supply chain breaking down and shortages in the labor market. And that's why you see, we saw almost 20% home price growth in 2021, which is unsustainable. And let's face it,
way unsustainable. That's too much.
That's not going to keep up. That's never going to keep up, and it shouldn't keep up. That's just fairy tale land.
Yeah, I think there's some data that shows that you look at the housing market and some of the key points that people want. They're indicators, okay, and they're indicators that says, well, why would this housing market crash? Or what potentially could make this housing market crash? Now, we do know that the month's supply has gone up, right? Now, it's not gone up for existing homes, but you look at where the builders are at, and they've strategically made a better position on not overbuilding, okay? And they also, you look at the month's supply for existing homes, that's relatively low. People know that. I think that's where the demand is going to be at, because if you look at the new homes, you're paying a premium now for these new homes, and there's going to be a market for that. But you're looking at where this whole thing has started as far as, are we going to continue to see these prices going up? Maybe for new homes, or maybe they'll stabilize, but I don't think new homes are going to be selling off the shelves like they've been, because existing homes is always going to be more bang for your buck. So I don't know. I mean, what do you think about that? Do you think that the month's supply is definitely a big part of it, this increasing and seeing this housing market somewhat stabilize from this hot market we were in?
Well, I mean, like I said, it's just the numbers are so frothy right now as far as home price growth. But, going back to the point of could this crash? We're in a different zone right now in the housing market, the underlying structures of it. Let's face it, back in 2005,
it was a free-for-all.
2004, 2006, it was a free-for-all, like you're saying, no doc loans, liar loans.
Yeah, it was sign up for your loan, not apply for a loan.
So
right.
The underlying mechanics right now of the housing market is stronger than it was back in those heydays.
Right.
Of, whatever you want to call it. You know what I mean?
Mm-hmm.
Yeah. I know at least in Las Vegas, though, and I don't know if this is something that has plagued the rest of the country like it has us, but, we took it really hard in the crash. We were one of the worst affected markets in the whole country.
You were second.
Yeah.
Florida
like
was
second
first,
to Florida and like Phoenix or something, but it was terrible here. And I know that one of the things that I think builders did, because we had what they called this shadow inventory for years, these thousands of REO properties that they were just releasing over time to keep them from flooding the market. But I know that we basically didn't build anything here, or at least we built very little to keep up for after the crash. So suddenly now our population's growing again. The economy finally got going again a few years ago, but we never built. So we have this real supply problem here with we just can't even build fast enough to keep up with population growth, let alone all the years we missed out on. And I don't know if that's something that's plaguing a lot of other markets like us, or if that's something unique to us.
Well, I mean, overall nationally, existing home sales, there's only a 2.4 month supply rate.
Yeah, it's really low.
Okay, so it's not that. Yeah, we have about half that, but that's still
really low.
6 months is seen as normal
right
now. So and that's down from that was in October, and that's down from 2.7 months in September of 2020. So yeah, that's the problem with the inventory.
Yeah. So I'm I'm wondering, do you think this will over time start to work itself out? That like maybe this is still sort of an after effect even of the big crash?
Well, I think go ahead,
yeah.
Patrick. Go ahead.
Well, I mean, right now what we're seeing, of course, is still the big move was out of the cities into more rural spaces.
Right.
People want more space, working from home.
Right.
So that was what the big surge was, beginning, I guess, in, May of 2020.
Urban
exodus. Go ahead, Dan.
Yeah, I think it's a big, like we talked about. I mean, people were moving inward or moving to suburb areas because they can buy a bigger home. I think a lot of people buy bigger homes, or they're moving to Vegas to buy a bigger home to work from home. They have their, a lot of people are selling. We talk about this all the time. But, you look at, I think a lot of people want to know where the direction of this market's headed. And I think they want something that shows, well, is this going to continue to keep sliding down, or are we going to hit a level at some point and then it's just going to kind of go through a small correction and then turn around? Now, you look at the credit worthiness of buyers, still really high. I think when you look at rates, if they decide to go up or if the Fed decides to make those rates go a little bit higher, it's also going to affect builder business. And one thing that the builders did in 2007 and 8 is they overbuilt properties, right? And so that was the real reason why we had an abundance of properties. In contribution to that, we had other people obviously getting foreclosed on and having to leave. But they've learned from that mistake. Now, there's going to be a market, like I said, for these new homes, but moving into, let's say, 2022, are you seeing that we're going to have the same growth that we did this year? And if not, why is it different? Patrick?
Well, as far as home price growth, Freddie Mac just came out recently. What we're seeing right now, of course, in 2021, we're seeing about 17% across the board for home price growth.
Right.
They're seeing about 7% in 2022.
Right.
And just because of the fact that, things will slow down a little bit because they were on fire,
Yeah, they were on fire.
So they're still projecting 7% for next year.
Those 7%, though, they're projecting. And, let's face it, with rates. Let's just talk about rates for 1 minute.
Mortgage rates? Okay.
Mortgage rates, they're not going to go much higher. Yes, they're tapering. But, when they're saying they're buying $120 billion in treasuries and mortgage bonds every month, which you hear on the news, that's incorrect. I watch it every day. I watch the New York Fed purchases every single day.
Mm-hmm.
The New York Fed purchases about $5 billion worth of mortgage-backed securities each day per month. So that's 20 days times $5 billion. That's $100 billion just in mortgage-backed securities.
Right.
So they buy another about $100 billion in treasuries. So they're really buying about $200 billion in securities each month, split between treasuries and mortgage bonds.
That's $2 trillion just for a year.
They're going to taper this month. So they're going to taper $5 billion in mortgage bonds. So they're going to go from $100 billion to $95 billion. It's not going to make a big difference.
Do you think this is actually helping our economy still? Do you think this is actually a good place for the Fed to be spending their money, $2 trillion into the stock market this year after how much? I'm actually just asking your opinion. I'm not coming with a preconceived answer, but
on that.
Go
ahead, Patrick. No, go ahead and answer that question.
I'll ask.
Well, let's face it. Right now, the Fed has an axe to grind. Essentially, they don't want interest rates to move much higher.
Okay.
Because of the fact that the Treasury, has trillions and trillions of debt out there in the hands of bondholders.
Right. They don't want to pay higher interest.
Those bondholders do not want, they get at a certain interest rate, and we don't want to service our debt at higher rates.
No, definitely not.
So let me say this: why in 2018 did it go up to 5% then? Because we've kind of seen this market heading in a direction where can we really sustain higher rates? How did it go to 5% then, but now we can't afford to go to 5% on this rate?
Because we have so much more debt now also, and we're going to be putting a lot more debt on the books through these infrastructure bills. Like right now, we're doing another 1.5 trillion. How do we pay for that? That gets paid through the issuance of bonds and bills and notes.
Right.
So our debt holdings just keep moving higher and higher.
Well, I'm a little worried about this, Patrick, because look, I mean, you see all the debt that we've created, and you see a lot of things that's going on now with Americans, and they're trying to recover. And if they keep putting money like in places like this, where does this all head to? I mean, if in 2 years we created more debt than we created in the last 10 years, and they do it again in the next 2 years, where are we going to be sitting? I mean, is this going to be a real big problem for Americans?
Well, yes, of course. Taxes will go up, first off. They say that taxes won't be going up, but in order to pay for these massive programs, you have to do it by the issuance of bonds and by higher taxes. I mean, that's
Higher taxes.
everybody knows that,
Yeah. So,
But taxes should, increasing. I'm not saying that,
Right.
increase taxes, because no one likes increasing taxes.
Right.
But that should, an actual tax increase should help stem inflation to some extent, shouldn't it?
I don't
should
know.
a little bit.
Yeah.
I mean, look at the tax we just received this past year on gasoline. That's
Yeah.
a tax in itself,
Yeah.
Last year this time a gallon of gas was about $2.10. Right now it's about
$4 something. Yeah.
Yeah, it's crazy.
insane.
Yeah.
I have a
That's
question.
a tax. That's all. Yeah, go ahead, Mitch.
I wanted to find out about 401ks. Like, so what do you foresee for that, for people that maybe do not have, maybe a significant amount of savings in their bank accounts, and their 401k is like maybe their only bank accounts that they have aside of their home. What do you see that for the future for 2022? Is that something like, hey, that's a good place to have it? Is it B, not a good place to have it, and you should try to look into something else? Like
In the long term, stocks usually outperform all other asset classes. And if you're in it for the long run, you're always going to make out. So, as far as a 401k goes or any kind of investment vehicle, you always want to be in it for the long term and never be a trader, because if you're a trader, you're going to lose money in the short term. But as far as a 401k, yes, the markets are going to come back. There's going to be corrections in markets. Like right now, the stock market is at all-time highs right now.
Yeah.
The S&P 500 Dow and the NASDAQ.
Yes.
So we're going to see a correction, and that'll be healthy. But in the long run, going into a 401k,
Right.
and and it's according to how old you are. If you're young, you want to go in all stocks.
Right.
If you're middle aged, you want to start to mix it up a little bit, and so on and so forth. But in the long run, I believe that investing in your 401k is a good bet.
So this is kind of a follow-up on that, because it does have to do with exactly what Ismail was saying, just about the stock market is a good place to have your money. And, I'd really like your opinion on this as an analyst. Like, one of the things that has always been true until recently about markets is that they're cyclical, and we have ups and downs. And, I know when in 2008, the stock market really crashed hard.
Yeah.
A lot of people complained about the stimulus bill that they passed, but now, years later, the real conclusion seems to be we should have gone like 3 times as big, and Obama should have spent $3 trillion, not $900 billion. But since that seems to be our new way of dealing with recessions, do you see the stock market as almost being recession proof now? Because, we went through a major, major recession this past year, and the stock market took a dip for a month, and then they pumped trillions of dollars into it. Right. So is that our new model for dealing with recessions?
Well, basically, it's don't fight the Fed.
Okay.
Don't fight.
That's really good.
Yeah.
Amen.
If the Fed keeps pumping money into the system, stocks are going to be, of course they're going to have their corrections. Right now, I think we should have a 10% correction in the stock market. It would be healthy. We have a little bit of pullback, and they buy in the dip right now.
Right.
But it's just like I said, the Fed is out there, and you can't fight the Fed. You try to go short the stock market, you turn around and you get burned.
Yeah.
I hope I'm not getting a little too technical, but that's the case right now.
Yeah.
The Fed is behind it.
It
Well,
just seems to me like they
yeah.
protected basically all the people with money from feeling the recession and let everyone who didn't get hit with it. Maybe that's a little too simplistic of a viewpoint.
Well,
but
let's face it. historically, big money makes big money. That's the way it goes. Unless you have your 401k and you put your money in each month,
Yeah.
and you should be fine with that.
Yeah.
But as far as being invited to the big party, that's kind of rough.
Yeah. Let me say this, Patrick. So you got money in your 401k. Everybody knows that businesses and corporations went away from having your money in other ways, as far as they went and said, okay, we're going to put it into a 401k, which is attached or lined up with the stock market. Is that really safe? Because I think a lot of people think that if the stock market crashes, wouldn't their 401k be gone as well?
Of course, yes. 401k stock market risk is always risk in anything that you're purchasing or you're investing in, or you're contributing money towards the bond market.
Right.
There's always a risk involved. Yes, without a doubt, always a risk.
Okay, so we're in agreement that you think rates are going to stay the same. Why is there everybody out there thinking that rates are going to continue to go up? Is there news out there that mortgage rates are going to trend up, or you're not seeing that? Like, I think a lot of data out there is showing that everybody's thought process is that rates are going to keep going to 4%, maybe even 4.5%, 5%. You're on record here saying no.
I'm looking at the 10-year yield.
Okay.
Right now, the 10-year yield is 1.46%.
Okay.
And that's basically telling us, or should be telling people that, the bond market's not afraid of inflation. It's
Right.
not afraid of the infrastructure bills right now. And, with a 1.46%, Treasury yield, you're not going to see mortgage rates move that much higher either. And
Right.
especially, you're still going to have the Fed in there purchasing mortgage-backed securities on a daily basis.
So where do we head on this, Patrick? Like, where does this go? Because there's a lot of people out there that think this is just so robust it's about to explode. We don't know if, people don't know where to invest their money. Some people, you talk about the jobs report. How's the jobs report looking? Because everybody's talking about it's looking better. Is it really better? Because if it was, why do we have such a shortage on a lot of these things that we still talk about?
Well, I mean, the jobs report, for October was pretty robust. It came in pretty decent.
But was that seasonal hiring?
What's that?
Was that seasonal hiring, though?
It could have been some seasonal hiring, but it was for October.
Right.
We'll have to see what November brings as far as the seasonal hires. So, but, a lot of people have left the workforce, from the time the pandemic started up until now. A lot of people retired. People are on the fence. Well, should I retire or not?
Right.
A lot of people have moved out. And we look at that. We look at the labor force participation rate.
Yes.
Which is the gauge of, how many able-bodied workers are in the workforce.
Right.
And it's on the low side right now because a lot of people left the workforce through, getting stimulus checks or whatnot. And like I said, through retirement.
So, I this is something that they were talking about a little bit last month, and then maybe this new jobs report squelched some of that. But, one of the things I think that has changed a lot in the past is a lot of people reevaluated their lives, and they looked at what kind of a job am I working? How much money do I make? And I don't think it's a secret that, as this country has progressed over the last 30 years, the American dream is getting harder and harder for each American to achieve. And I do think that maybe we're actually seeing a little bit of a nationwide revolt amongst the proletariat, and that they're simply saying, I'm not going to work this job for minimum wage anymore when I can't pay my bills or pay to take care of my kids to do it. And I know that that's maybe something that hasn't been a traditional part of our economic model. And do you think that that's actually happening? And do you think it's going to continue? And also, will it lead to an increase in wages?
Well, beginning in September, the enhanced employment benefits did stop.
Okay, right. I know a lot of people thought if those go away, we'll get people back to work.
So we'll probably get some people back to work there. We need a lot of truckers. But, as far as the labor force, it could be it could be a little shaky, going forward here, as far as getting people back to work, because even though the enhanced employment benefits ended, there are still
Right.
programs out there that are paying people money.
Yeah.
Till this day, there's still programs out there that are, because I thought it was pretty much, it's like everything's been
Yeah.
finalized and it's done. Now, I know a lot of people too, very skeptical on getting back into trying to buy a house. There was people pre-COVID that was all about buying a house, and they lost their job, or maybe they were on furlough, or they were, laid off for a period of time, didn't make the same money. Now they're back making the same money. Now, I know inflation we talk about could be a problem, but the trust and the consumer confidence in people feels like it's been diminished.
Well, that's
And
a good point. Let's face it, jobs buy homes.
that's right.
Yeah.
When you put all the other factors in there, if you have a job, you're secure in that job, or you feel that you can leave your job and get a better job,
Right.
that helps the housing market.
Well, and we have seen wages increase a little bit too over the past year. I don't think it's caught up with inflation, but I think it's been one of the biggest increases we've actually seen in wages in years too, something like 4%.
Right.
So, I mean, if we have that, that's got to at least they've got to cut back on the effects of inflation at least somewhat.
Yeah, I mean,
And they
go ahead, Patrick.
Wages are going up because of the scarce job market.
Right. I don't think it's going to sustain, like, people, their wages, their average wages are not accelerating as fast as some of the costs that they have to pay for food, shelter. Let's be honest. I mean, people were buying homes. They're looking at it as, oh, well, this is going to be an investment. And the mindset is shifting where they're just buying it for shelter. And there's a lot of people out there buying as a primary residence. You look at the properties and what people are trying to get into. I feel it's a fear of missing out a little bit still. We talk about Las Vegas. It's very unique. I mean, look at Vegas right now. Vegas, to me, is kind of an exception to the rule of that properties are going to appreciate only 7%. This could be appreciating even as much as high as 10 to 15% next year again, because the low supply and high demand is still there in Las Vegas. And
Right. Different parts of the country, you're going to see different.
Correct. It's going to see different patterns. So, looking at this housing market and seeing where we're at, you're saying that it'll be steady going into next year, and that's kind of your prediction, right?
That's what it seems like right now.
Yeah.
We can't have this home price growth at these frothy levels for that long. We're looking at maybe 7 million in home sales.
Yeah.
In 22, the same as 21. We're looking at total originations of about 3.1 trillion or so in 2022, down from 4.5 trillion this year.
Well, so I got a question here. So somebody here that is on the show quite a bit, his name's Running at Altitude, said land development also getting worse for builders. So, I mean, it is. I mean, everybody always asks about Las Vegas. Are we running out of land? I don't know. Do you feel that land development is getting worse for builders here, Patrick?
I mean, we haven't heard that yet. I mean, it's like from the National Association of Home Builders.
Right.
We haven't heard about any land shortages. We've heard about supply shortages and labor shortages.
Yeah. So we still have the same issues: labor shortages. We have supply shortages. So I guess the question is, we all know that the builders here, if you're going out and buying a new home, a lot of our people that work with us and go out and buy new homes, they know that the consumers are getting the cost passed to them. Now, it's important to know that you're going to be paying more for a new home, but a lot of times with those interest rates going higher, this may detract people or have them retract from buying a bigger property or buying a new home because the cost is a lot higher. So heading into, let's say, into 2022, do you feel that existing homes are still going to be in high demand and maybe new homes are going to be diminishing in high demand based upon the fact that these costs are being passed to the consumer?
Well, I mean, let's go, to the basic facts. Of course, everybody, every day people are going to buy
Right.
homes. People are going to need homes. There are new families formed every day.
Yeah.
That's always going to be consistent. But as far as existing home sales, like I said, we have a glut of inventory in the existing home sales market. So, we're not going. Then the demand is probably going to be robust,
Right.
probably not as crazy as we've seen.
Right.
Going to 2022. So, it's all according to. Then we have the forbearance programs that are coming to an end.
Right.
And we may see some home sales, some new homes come out of that end.
So you don't think so? Like the month supply obviously is a lot less for existing homes. I feel like they're going to be in high demand going into next year, and I don't see this market stopping. I mean, everybody thinks that this market's going to cool down. I think it's going to slowly maybe come to a slight correction, I would say, but I don't think it's going to completely stop. So, other than that, that's your thoughts, right? You don't think the market's going to ever slow down at this point, right? It's just going to continue to keep increasing.
It's going to be steady. I don't think it's going to have a slowdown. We'll have to see how this all plays out with people working from home. It seems like that's the new thing going around the country. So people may want to be still moving out of the cities.
Yeah.
What about forbearance? Do you see that would take any effect here by the end of the year?
Yeah, what we're hearing is that you're going to have homes come out of forbearance that are going to be eligible for for purchases. So you'll get some homes out of that end also.
Yeah.
Do you think there's going to be a wave of foreclosures?
I don't think there's.
No. But for forbearance, yes.
Forbearance, maybe.
Opportunity to.
But
pay
I mean,
off or
even then,
sell.
think about it like this, though. I mean, the bank doesn't want to really foreclose on people that are in forbearance. I mean, I'll give you a quick example. So there's people that I know that were in a forbearance. They took it on for 6-8 months, and then they had a lump sum of money that they put at the back end of the loan. Then they came back and said, okay, now that you're done with the forbearance, we're going to go ahead and put you on a loan modification. And now you're going to extend it from a 30-year fixed loan to a 40-year fixed loan. And we're also going to give you a lower interest rate.
A 40-year fixed loan.
And so the banks are willing to do anything at all costs to not foreclose. They don't want to foreclose.
They're definitely working with them, but of course you're going to have a percentage that just go to the wayside. You know what I mean?
Yeah.
Not all of them are going to get through it.
Absolutely. So go ahead.
Nothing. I was just thinking we do have all these iBuyers too, which I know that's probably reduced the rates of foreclosure at least a little bit.
Patrick, do you see what do you see for investors throughout the country? And if so, if you do see potential, what states will you think that there would be that activity for them to actually start purchasing properties?
Like investors that scoop up large properties?
Yes.
Yeah.
Yes.
Well, yeah. I mean, you're seeing a lot of that right now. I'm hearing BlackRock is doing that right now. So, yes, they're trying to scoop up as many homes as they can. They really are.
Just not Zillow.
Here.
Well, everybody talks about the rents going up here. Our rents are really high right now here, and they're really have increased. I don't even know the numbers, but it's some crazy. I think it's like 15% or something.
It's like a home at 1,500 square feet. It's about 2,100 right now.
That's crazy.
That is crazy.
Yeah, and so you look at these properties and you look at the prices. So the demand isn't going to go anywhere. It's interesting to see where all this ends up, though, because everybody thinks that the whole supply part of why this is going up, the demand is still there for buyers. Here in Las Vegas, there's still not enough homes. And I feel that we still need more homes on the market. I don't feel like, we looked at the numbers over the last 4 weeks, Patrick, and it's relatively the same. I mean, even though we have price reductions, it's still relatively the same. We're seeing a higher increase in price reductions, so maybe it's a good opportunity to buy a house for people that maybe were on the sidelines because now you're back in the market. But is this going to be a continued pattern? I don't know. Is this pattern going to stay consistent? You think so?
According to what part of the country you live in, different pockets are going to have different activities. Like over here on the East Coast where I am in New Jersey, we have a pretty robust housing market still.
So do you feel like when heading into 2022, you feel that what is your prediction with GDP?
I think the housing market's going to be steady. Some of the froth will come off as far as home price growth.
Right.
As the year winds on, maybe demand falls a little bit. we could have, the 30-year fix, maybe we'll go up to 3.5 or maybe 3 5/8, which is definitely, still a great rate, except for, as you guys know, the people that are in the markets now only know low rates.
Yeah, and once you get used to a 3%, it's hard to go back to a 5%.
Exactly.
Let's talk about gas prices, because I want to talk about that before we end the show and end this conversation. So we know that gas prices have gone up. It's a hidden tax on people. You talked about this. We've talked about it. So where do you see gas prices going up, and why are they going up at this point?
Well, right now, this time of the year, you should be seeing a little less demand, and you should be seeing, gas prices move a little bit lower. But
Right.
we're not seeing that. We're seeing the opposite because supply and demand issues.
Right.
Last year, this time, we
Right.
were the largest exporter of oil in the world. Now we're looking for OPEC to give us oil. We're looking to shut down the number 5 pipeline coming from Vancouver into Michigan.
Wow.
And I don't understand why we would be doing that right now when we're facing such high prices at gas.
Well, I know why, but I'd rather not get into
Okay.
it.
Okay.
Well, listen, I mean, it's an assumption, but I mean, if it's factual or you have some proof of it, let's talk about what you think is happening with it, because it's something that people should at least understand. You can always have your own thought on it, but I mean, why do you think that we shut down our oil here and we're buying it from other countries?
Bad leadership.
Well, it's really pretty deep, but essentially, they're looking to usher in the Green New Deal.
Which
And
wouldn't.
the Green New Deal means essentially shutting off, pipelines and, switching over to electric energy, which is fueled by coal, which is fueled by oil.
Right.
So that's what they're trying to do. They're trying to, cut off the oil supply here. And now we're begging Putin and we're begging OPEC to give us more oil, when last year this time we were sending oil out all over the world.
It's just, if you're begging OPEC for more oil, like, that doesn't really fit with stop domestic production, and green.
OPEC saying, sorry,
Yeah. And I mean, green energy is great, but not if you don't have it available to replace the existing,
What about-
petroleum-based infrastructure.
Exactly.
What do you see for
Exactly.
solar here in the near future, where I hear that everything is going into, even like new homes, they're being set up and it's basically structured for solar to be their main.
Like California.
Yeah.
Like California.
Is that something that you foresee for the state of Nevada
Yeah,
and just throughout the country?
Well, I mean, solar has its problems too. I mean, let's face it, in California now, they're trying to switch to alternative energy, and there's brownouts every day
Yeah.
throughout the state. They're saying, okay, don't use your air conditioning when it's 1,000 degrees out. Like the gentleman was saying, if you're going to use the, green energy or alternative energy, let's get it into place first before we get ourselves off oil.
Right.
Because if we don't do that, the whole country's going to be screwed. And solar energy and wind power, those wind powers, when they put them up, the environmentalists should be saying something, because if you put those in the ocean, what's it doing to the marine life?
Right.
You know what I mean?
Let's talk about real quick on car dealers. Running at Altitude brought up a comment on car dealers and car dealerships. They're running. They don't have enough cars on the lot, and they're saying go ahead and I've heard that you can trade your car in and get the same value if you have a year-old car versus a brand new car. They'll still give you the same value in it. What is up with that? Why is the car dealerships having such an issue getting cars? Is it the same supply demand?
Same thing,
Yeah.
getting these ships to port. Like, we're over here in New Jersey. We have a huge port of cars that, and usually you see thousands upon thousands of cars. Now it looks like half. We have a big car dealership right near me.
Mm-hmm.
We know the person that's the financial guy. There's no cars on the lot. And
Right.
the used car sector is also on fire.
Yeah.
Because people are trying to look for any kind of vehicle right now. You can't get anything.
Did you see anything about this? I saw this a few weeks ago, but I saw that Intel was going to start producing chips for cars because of the worldwide chip shortage, basically.
Yeah, I heard that. Yeah.
And I don't know if that's going to make a big enough dent or how fast it will in the car problem, because it seems to be the chips is the real issue.
I think it's just getting the cars to where they have to go.
Okay.
Right.
So you think it's more part of the larger supply chain problem, not the chip issue directly.
Yeah.
So we got some real issues still that I think we need to work out, in my opinion, Patrick. I mean, we'll kind of end this here with this conversation, but I know you look at, so we've all agreed that rates probably aren't going to go too much anytime higher. They're not going to go too much higher, maybe 3.5, 3.75. Now, this is your thought on what you see with the Fed, because the interest that they pay on a lot of these things that, let's say, the bills that they produce, the treasuries, the bonds, the interest that they're going to be paying on it, and all the debt that they create is going to, the interest on it is too hard to service it. So there's only going to be so much they can do. And then
now the Treasury, just to be precise, the Treasury services debt, and that the Treasury issues all those notes, bonds, and bills.
Yeah.
The Fed is the one that purchases
them.
Treasury securities and mortgage-backed securities. But yes, you're right. But I just want to clarify.
Yeah, no, that's exactly right. And then so inflation, you don't think is going to be a long-term problem. I think a lot of people think that inflation's here to stay and it's going to continue to go higher. What is the Fed's tactic, you said, to eliminate inflation or reduce it?
I mean, first, like I said, they'll take some money out of the market.
Right.
And there's other ways that they take money out of the market through different mechanisms that they have. They can withdraw liquidity from the market easily. Like I said, they could raise interest rates. Even if they raise, right now, like you said earlier, the interest rate, the Fed funds rate, with the overnight rate that banks charge each other for balances
right.
when they borrow from each other. I mean, that's at 0% right now. So June 22, if we go up a quarter of a point, all right, so we're at 0.25%,
Right.
I'm talking about if rates go to 3% or 4%,
Right.
that'd be a problem to service. But
So
a quarter of a point is not that much.
yeah, so the Fed doesn't have any concern about inflation then, really, is what you're saying. Not too much.
Well, they do have some concern. Yes, they are definitely concerned about it. They're watching it very closely. But like they said, they'll pull out all stops if needed, to combat inflation. And I think Powell has done a decent job. Hopefully, he stays.
Yeah. All right. You guys have any other questions for Patrick? Anything else, Patrick? You have anything to include or say?
That's about it. I'm done for the night.
What about you?
You had a lot of good information, Patrick.
No, it
you
does.
were a really great guest, actually.
Yeah. I think what it is, Patrick, thank you so much. If you guys know Patrick Hennessy, he's with Mortgage Market Guide. He's also a market analysis. He's in the trenches. He's seeing this stuff all the time. And, people out there, they want to know facts. They want to know data and information. And, we're not going to sugarcoat it. We're going to just tell it as it is. And I think that's important, right? So
I'm Patrick at Tabrasa, TADRASA. .io for Indian Ocean. It's a weird email.
Yeah.
If you want to get in touch with me, give me a shout.
All right, man. We appreciate you coming on, Patrick. So we'll kind of end the show here in a second. So, guys, we want to do a quick market update on what's happening with the housing market. Now, look, there's not much change. So for us to do like a run.
Night, guys.
All right. Thank you, Patrick.
Hi, Patrick.
Bye, Patrick.
Yeah.
So if there's not much change, right? I mean,
No,
you
I
look
was
at
gonna
the
say,
situation. So
yeah.
let's talk a little bit about what you're seeing and what the numbers you see right there.
Yeah. Okay. So I got the October monthly housing report that the Las Vegas Realtors puts out for all of us realtors every month, so we can see how things are going. It's done by Applied Analysis, which is a local economics firm here in town. They're very well known. So what I'm looking at right now is the single family units. That's usually the most important people look at. These are the numbers. So these are October's numbers. And our prices, the median price of a home, which is what people usually look at, it did go up a little bit. So I want to remind everyone, July and August stayed the same at $405,000. And then in September, it went up to $406,500. And now in October, it's gone up to $410,000. So, it has gone up a little bit, but those are very steady numbers. If you're looking at it, that basically since June, we've only had about $5,000 in the median price of homes growth here So I would say that we're looking at, we're stabilizing. We are not still skyrocketing, which I think is a good thing.
I think we're stabilizing. I have a lot of data that comes out and just kind of gives me some things that I kind of consider of why. And, again, I think it's a slow time of year. So I don't know if we don't put it all into perspective that way. I also look at the fact that you look at where would we head if this thing was going to go into let's say a collapse, right? Or let's say go into a recession. We know that you look at the 2019 and 2020. 2020 to me was a recession because we had COVID. Now, it was still strong, the housing market. Now, if you look at the housing market heading into next year, why I think it's not going to ever become a recession is, one, the jobs numbers came out and it's not great, but it is growing and it's becoming a little bit stronger. You also look at the demographics of people. There's more people right now between 27 years of age to 33 years of age that there's ever been in history.
And
right?
it's the largest population.
And that's the largest population. So you're looking at one of the things that's out there that says what's pushing or what's the demand. You have that. And then you also have situations where we've had a crash not too long ago. And we talked about the builders figuring it out. We also look at these indexes, and a lot of the indexes that come back with the home numbers and things that people look at is showing that it's not. Now, look, it sounds biased, right? It sounds like, well, we think that this market, go buy a home. I mean, at the end of the day, it's not about going and buying a home. It's about, does the consumer confidence and does the data show that it's different than what it has been in previous history? We have cycles, and the cycles that we're seeing is that the cycles, yes, we are slowing down just a little bit, but the cycles aren't in what we're looking at with the credit worthiness of buyers, with the amount of options that people have on getting out of the forbearance and out of the foreclosures and situations like that. Things like that contribute to a collapse because it's all at once, everything happening. It's like a domino effect. It's a perfect storm. That's not showing signs this time.
No, that's a good. And that's a good thing. We don't want to see a big crash. I do think a lot of people, though, would like to see at least a slowdown, though. So, like you said,
correction.
Or just a plateau.
Well, I think it's natural to have somewhat of a correction. Yeah. I just think that here in Las Vegas, our average price of a home. Let's talk about that. I mean, I remember back in the summertime, I was telling everybody it's $410,000, right? What's the median price point today?
$410,000.
Right.
Yeah.
I mean, so. That doesn't mean it's any worse. It just doesn't mean it's getting any better, though.
Remember what Brent said? So he was like, okay, I think the market will stabilize, but I don't think prices will go down.
Yeah, I think so. I think that's what we're seeing.
But the data that I'm talking about is what would contribute it to continue to go down and even go to a collapse. Yeah. And that's what I'm saying is the data that shows.
Yeah,
I think a lot of people think that, we're at the height of a boom.
Yeah.
I think we're at the start of a housing, I wouldn't say crusade, but a housing market that's going to keep flourishing.
I think we're in different times than we've been in the past.
Right.
You can't look at the way old models used to because we've
I think,
changed
in my
our
opinion,
business
I think you hit it right spot on when you said about we have the largest demographic when it comes to, what was the age ranges you said?
27 to 33.
Right. So those are the times that people most likely going to start a family.
Buy a home.
They need a home. They want a home. And that's something that they need to, move forward and become an adult and, stabilize, have a stable life, right? So that's like the first thing is shelter. Like no matter what.
And I talk about credit worthiness, right? And so buyers today, they get to going through to get a loan and to get into a position to buy a house. It's not any harder, but it's not any worse. So we got to a point where you have to be very qualified to buy a house. There's no cookie cutter sweet,
but that's a good
easy
thing.
way to get into a house now.
Time,
yeah, I mean, you have to have solid foundation to get a house. So that's another part of it. And so you look at all this data, our month supply is slowly growing nationwide. And you look at what our month supply is on existing homes. I feel that if we get up to a point of, let's say we have 3 months supply on existing homes, I think that's a real healthy market.
Yeah.
And you're going to start to see that. So go ahead back into your.
Yeah, we're just like right now we're still that is a big problem for us, and it appears to be a big problem nationwide, as we've talked about the whole show, is the supply issues. And we have what they call is 1.1 months of availability. And the big numbers here to look at is that even you can look at the number of basically units available for sale compared to a year ago.
Right.
And a year ago in Las Vegas, we are down almost 25%. So there are, 1 out of 4 people just not putting their home up for sale that they would have a year ago. So it's not even just too many people wanting to buy a home. We actually just don't have the same number of people putting their homes up for sale. So we've got that crunch on both sides.
I think a part of that, though, is because like what Patrick was saying, what we talked about is if you have a job and you want to go buy a house, or let's say you want to leave the house, where do you go from there?
Yeah.
And if your rents and the rents are going up are just as high as the mortgage, why would you jump out of that house and go and rent a property
and pay just as much or more?
And pay just as much or more, and then you can't find another house after that because you got multiple offer scenarios going on. So there's a lot of things happening that prevented people from having the ability to transition. Now I'm starting to see
that should work itself out though over the next. I mean, as we get out of this.
Yeah, I think it's starting to, right? And I think you go from 2020 to 2024. They're talking that there's going to be an expansion in the housing market, and it's going to continue to increase. GDP is also going to continue to increase. So you're seeing a lot of people feel like it's a start of the next 4 years of just this housing market continuous flourishing. And I think that's something that we all should pay attention to, because look, we're in a cycle where I think, yes, we're going through a small correction, but at the end of the day, overall, people are going to still buy homes. I think in Vegas, we could be up to still 10 to 15, maybe even back to the numbers of 18 if the supply is low and the demand stays the same.
Oh, you just said the words out of my mouth.
Right, and I think that's
as long as there's a demand.
As long as there's a demand, right? So, you guys have anything else to say about this? About anything going on in the housing market? Rates? Right now, I know rates are still good. You got anything else to say, Rich?
I just, I think that as long as you don't see prices going down, that will help keep people motivated to buy.
Right.
As long as you don't see that risk of you actually losing money in the short term on your home, then our housing market should stay healthy.
What about you, Esmeralda? You got anything else to say?
I just think that I agree with what you just said. I think that's true. I mean, as long as the market doesn't lose money, I think that it's still a healthy market, and
and
as long as the demand's there, we're gonna people need a home. It doesn't matter what the market is.
So you guys know this show. This is the best show on YouTube and streaming live
with the best guest,
with the most real and behind the scenes information. I bring on people that's going to give you content that's going to make you become smarter and make better decisions, and hopefully buy a house if you want to. If not, that's fine. But this show is primarily about financing and real estate. And guys, if you haven't looked at other things that we're doing, I also want you to check out the lvhomeprofessionals.com. That's my website. I want you to check that out. It's relatively new, so look at that. Also, I got two other YouTube channels that I'm starting up. It's called The Sound Off, and I have another one that's called Las Vegas Cribs Tour. So I want you guys to check that out.
Seriously?
Yeah, we got a lot of good things going on, and I've been putting a lot of focus on that, but I'm going to still take care of everybody here that's looking at the podcast and getting information, because really it's all about giving the information. So guys, please subscribe to the channel. I'm going to continue to have people that come on that's going to help you with education and understanding this housing market. I'm Dan French. We'll see you on Saturday.